Welcome to ETF 360. I'm Tom Lydon, along with our Director of Research, Dave Nadig. And today joining us is Matthew Page, Portfolio Manager at Guinness Atkinson. Matt, great seeing you.
Thanks for having me.
Matt, as you know, we're talking to advisors all the time, and their biggest concerns today are inflation and trying to grab yield for clients. What advice would you give them?
Well, I think you've got to look for companies that are going to be able to pass on the inflation that they're experiencing through price rises, along with companies that have got robust balance sheets and the ability to weather whatever level of inflation we see, whether it's going to be short-term, transitory, or whether it's going to persist over the longer term. So, inflation isn't necessarily a bad thing for equities if companies can maintain margins, and that will grow their profits with that inflation as well.
You guys came to market a little bit earlier this year with the Smart ETFs Dividend Builder ETF, DIVS. What's different about that? I know it's an actively managed fund, but what's the approach there that's really helping advisors?
Well, it's an actively managed, highly concentrated 30 stock portfolio. So we are looking for best-in-class dividend payers, but not only that, companies that have primed for dividend growth over the short, medium, and longer term. So I think in this environment where people are worried about inflation, that focus on dividend growth rather than just high yield can be a nice hedge towards that.
And that's also a global portfolio, right? So you're fishing from the best companies you can find all around the world?
Absolutely. We own companies in Asia, Europe, and the US. Absolutely, we're trying to have a balance between those great domestic stocks, but also those best-in-class companies you can find internationally as well.
Matt, Dave and I have been cheering you guys on from afar, being the first old-fashioned mutual fund that wrapped yourself into an ETF wrapper, did that conversion, and many since then have followed. You got to be really proud of that.
Absolutely, yeah. Being first to market on that was a great achievement.
Yeah, I mean, Tom, I think we were all waiting, nerds like me in particular, for somebody to finally pull the trigger. So it's nice to see somebody actually get out into the market with these converted funds. I think it's going to be a wave. I think we're going to see more.
Yeah, so without going down this rabbit hole, Matt, there's so much money that's still in mutual funds, and now this advantage of this new ETF wrapper. But it doesn't mean that you have to select one or the other. It's really all about choice, right?
Absolutely, yeah. You can have that actively managed, concentrated portfolio in an ETF wrapper now.
Matt, not to put you on the spot, but you got a concentrated portfolio. Can you select one of your favorite stocks and why you really like it?
Yeah, well, Taiwan Semiconductor would be a good example of everything that we're looking for. It's consistently high return on capital. It's got great growth opportunities. It's highly cash generative, which is what we need for that dividend. And they're importantly investing, about 30 billion this year to grow their business and expand. And that's what you need if you want to grow your dividend over time as well.
And is that an example? You were talking about companies that can pass on the inflation to the investor, right? That turns into revenue for them that helps you offset inflation. Semiconductors has got to be a place where that's showing up too.
Yep, absolutely. We've already seen TSM announce price increases this year, as they have been experiencing some increases in raw material costs and equipment that they need for the manufacturing. So it's happening, it's already happening, and margins look set to be maintained into next year and beyond.
Thanks so much for joining us, and thank you for watching. We'll see you next time on ETF 360.